What if I told you there's a secret hiding in plain sight, a wealth-building strategy so powerful, yet so simple, that most people completely overlook it? It's not about crypto, it's not about real estate flipping, and it's definitely not about getting lucky with a single stock. It's the one thing that separates the world's wealthiest from everyone else, and it has nothing to do with their IQ or how hard they work. It's an investment that most millionaires, and even billionaires like Warren Buffett, quietly use to grow their fortunes year after year. Imagine two friends, Alex and Ben. Both start with $10,000. Alex is smart, reads all the financial news, and spends hours every day trying to find the next big thing. He buys a hot tech stock, it shoots up. He feels like a genius. Then he tries to time the market, sells it, and jumps into a new company he heard about online. Sometimes he wins big, other times he loses. His portfolio is a roller coaster of exhilarating highs and gut-wrenching lows. Ben, on the other hand, does something almost boring. He takes his $10,000 and buys one thing, just one. He doesn't check it every day. In fact, he barely thinks about it. He just lets it sit. While Alex is stressing, celebrating, and then stressing again, Ben is living his life. He's focusing on his career, his family, his hobbies. Fast forward 10 years. Alex, after a decade of frantic trading, has managed to turn his $10,000 into maybe $20,000 or $30,000 if he's lucky and hasn't blown up his account. He's got some great stories about his wins, but he quietly avoids talking about the losses, and his account has grown steadily, quietly, and powerfully. It's likely worth double, maybe even triple what he started with, and he did almost nothing. What did Ben buy? He bought the S&P 500. This isn't just a story. This is the reality for millions of investors. The S&P 500 isn't just a stock ticker, it's a piece of the 500 largest, most profitable, and most innovative companies in the United States. Think about it. When you buy into the S&P 500, you're not just betting on one company. You're becoming a part owner of Apple, Microsoft, Amazon, Google, Johnson & Johnson. The list goes on. You're buying a slice of the entire American economy. Why is this so powerful? Because it solves the single biggest problem for investors: for risk. When you buy a single stock, you are betting that one company will succeed. If that company fails, you lose everything. Remember Enron, WorldCom. Great companies, until they weren't. But when you own 500 companies, the failure of one or two barely makes a dent. If one company struggles, another one is probably soaring. It's built-in diversification. It's like having an all-star team where even if your star player has a bad night, the rest of the team can still carry you to victory. This is the core reason millionaires love it. They didn't become millionaires by gambling. They did it by making smart, calculated decisions that stack the odds in their favor. They understand a fundamental truth: it is incredibly difficult, almost impossible, to consistently beat the market. Even the most brilliant hedge fund managers with teams of PhDs struggle to do it over the long term. So, instead of trying to beat the market, they simply become the market. They accept the average market return, which historically, over the long run, has been around 10% per year. Now, 10% might not sound as exciting as a crypto coin that goes up 1,000% in a week. But here's the secret sauce: consistency and compounding. Let's go back to that 10%. If you invest $10,000 and get a 10% return, think of it like rolling a snowball down a hill. At the top, it's tiny. But as it rolls, it picks up more snow, getting bigger and bigger, faster and faster. Before you know it, you have a massive boulder of wealth. This is how fortunes are built. Not in a day or a week, but over years and decades of patient, disciplined investing in the broad market. The beauty of the S&P 500 is its self-cleansing nature. The index isn't static. There's a committee that regularly reviews the companies in it. If a company starts to falter, if it's no longer one of the top 500, it gets kicked out and replaced by a new, Rising star. This means your investment automatically stays current. You're always invested in the winners. You don't have to worry about holding onto a company like Blockbuster Video as Netflix takes over. The index does the work for you, selling the old and buying the new. It's like having a team of elite managers for your portfolio, but you pay almost nothing for it. And that's the other key point: fees. Actively managed funds, the ones where a person is picking stocks, charge high fees. These fees eat away at your returns year after year. It's like trying to fill a bucket with a hole in it. S&P 500 index funds, on the other hand, have incredibly low fees. We're talking fractions of a percent. This means more of your money stays in your pocket, compounding for your future, not the fund managers. Warren Buffett, arguably the greatest investor of all time, has been a huge advocate for this strategy for the average person. He even made a famous $1 million bet that a simple, low-cost S&P 500 index fund would outperform a hand-picked portfolio of hedge funds over 10 years. And what happened? He won easily. Not because he's a wizard, but because he understands the simple, powerful math of the market. He has instructed that 90% of the cash his wife inherits be put into a low-cost S&P 500 index fund. If it's good enough for Buffett's family, it's a pretty strong signal for the rest of us. This isn't about get rich quick. It's about get rich sure. It removes emotion from investing. We are all human. We feel fear when the market crashes and greed when it soars. These emotions cause us to make terrible decisions, buying high and selling low. But when you invest in the S&P 500 for the long term, your strategy is simple: keep buying, especially when things look scary. When the market is down, it's on sale. You are buying shares of the best companies in the world at a discount. The wealthiest people understand that time in the market is infinitely more important than timing the market. They're not day traders. They are business owners. And by owning the S&P 500, you become a part owner of American industry. You are betting on human ingenuity, on innovation, on the relentless drive for progress. Will there be recessions? Yes. Will there be market crashes? Absolutely. But throughout history, through wars, pandemics, and financial crises, the American economy has always recovered and pushed to new heights. By investing in the S&P 500, you are harnessing that powerful, upward trend. It's the ultimate sleep well at night investment. It requires no genius, no special knowledge, no constant monitoring. It just requires the discipline to start, the patience to let it grow, and the faith in the long-term power of the market. It's the simple, boring, and unbelievably effective path to wealth that's been hiding in plain sight all along. It's not a secret because it's hidden. It's a secret because it's too simple for most people to believe it works. If this idea has planted a seed in your mind, if it made you question what you thought you knew about building wealth, then my job here is done. There are people in your life who need to hear this message. They are being sold a lie that investing is complicated, risky, and only for the experts. By sharing this, you could literally change the course of someone's financial life. So please, don't keep it to yourself. The more people who understand this, the better. Thank you.